the most, okay, I just got a prompt that this meeting is being recorded, that's fine. There are three basic needs in retirement or during retirement. First is housing. We are very fortunate that Singapore is not the number one, but definitely in the top rank in terms of home ownership. So most of us own our homes. So we, in a way, need not worry about having shelter over our head. But we still have to pay things like conservancy charges, car park fees if you own a car, definitely utilities. So this will be under expenses, retirement expenses. And healthcare cost can be a major item because it is something that is not that predictable. So it is always good to be prepared. So basically, healthcare cost, housing, and of course, transportation and food. But we have put transportation and food under retirement expenses. Now, very quickly, these are what we call key life phases or stages. When we are in our youth, some of us may be fortunate that our parents encourage us to start saving as a young boy, you know, in primary school or even or young girl in primary or secondary school. And then if we have that good habit, we may continue on as a single adult. And certainly when we start our career, our job, we may set some money aside. So this is what we call the wealth accumulation phase. So this is the period when we really should be working very hard to try and save as much money as we possibly can. And there's a very simple rule, very generally speaking, that we should save 10% of our gross income each month if we can. And then the pre-retirement phase in our 40s and 50s, that is when we are at the peak of our career. When our career is established, we are married with older children, or some of us may still be single and living with elderly parents. So this is what we call the pre-retirement phase. And then the last phase is what we call the retirement phase or the golden years. It can be anything from 65 onwards. And some people with very good planning, they may even retire in their late 50s. Now, building my retirement income, in the interest of time, we are going to talk about 5 options. First is annuities and insurance. The second option is right sizing your property. Now notice the choice of word here. It is right sizing and not downsizing. And in a little while, I will explain more about that. And then the third option is cash top up to your CPF special account or retirement account. The fourth option is the SRS or supplementary retirement scheme. And then lastly, some investment options. What are some financial products out there that you can invest in to generate some income for your retirement? Now let's first talk about annuities. Okay, so what are annuities? Annuities are actually a form of insurance contract that will promise to pay you a regular income either immediately or in the future. It's quote unquote an insurance contract because it insures you against, not against, that is not the right word. It helps you in the event that you live, in the happy event that you live a very long and healthy life, okay? So for example, CPF Life is a good example of an annuity. So you can buy an annuity with a lump sum upfront, or it can be a series of payments depending on what is the features, what are the features in that particular annuity. So what are the benefits? I mentioned earlier on that it protects you from outliving your savings during your retirement years. And you receive more by living longer. So if you are strong and healthy, then this is a way to go, I would think, purchasing annuities. Now, the downside is some annuities do not factor in inflation in their payouts and therefore reduce future purchasing power. Imagine you are receiving an annuity every month for say 10 years and it's exactly the same amount. But we know that in the years to come, things will become more expensive. So that is what we mean by some annuities do not factor in inflation into their payouts. So it is very important before you make a decision to buy a particular annuity, you are fully aware of what are the features in that contract or what are the terms and conditions in that contract. The other option is insurance, okay? And we are talking about ILPs here, okay? Investment-linked products. So investment-linked products have two features. That's why we say that they are flexible, because it has the insurance component, and then they have the whole life and endowment policies component, the insurance component. So it's packaged, two packaged into one. Now the downside is the protection will cease upon termination of the policy or upon maturity of the policy. And because one component of the ILP is investment linked, that means they will use your premiums to invest. The insurance company will use your investment to use the portion of your insurance that is investment linked, and they will invest, and therefore it will incur some risk. Okay, and of course it is a long-term commitment. So if you think that, oh, I need to liquidate, meaning I need to convert my assets to cash, then you will have to incur a penalty or some fees. So there are downsides to ILPs, investment-linked products. Now, right sizing. Earlier on, I mentioned this careful choice of word, right sizing and not downsizing. When we are in the retirement phase of our life cycle, our children are grown up, they have their own families, and they will have their own home, most of them. So we don't need a 5-room flat. We don't need an executive apartment. We may not even need a 4-room apartment. Okay, so that is what we mean by we can downsize to a smaller home that is more than adequate for an elderly couple. So the cash proceeds can be used for our daily expenses and even for investment. And it can be done, the right sizing can be done at one go or even in stages. From say, a 5-room flat to a 4-room, and then eventually from a 4-room to a studio apartment as an example. So I mentioned that cash proceeds from right sizing to a smaller home can be used for daily expenses and investments. And the larger space may not be needed, and therefore we don't have to clean as much, and of course lower costs of maintenance. And there are many government schemes, and I'm going to talk about 2 of them that will help us with our cash inflow when we right size to a smaller home. And of course the downside is smaller living space. Some of us may think, oh, if I right size to a smaller home, if we want to have a family gathering and my 3 kids and their families, come, together to have a family reunion dinner, for example, we don't have enough space. So obviously, a smaller living space would be the downside. So what are the factors that will affect your decision to monetize your property? And when we say monetize, it may not necessarily just be selling, right sizing to a smaller home. You may remain in your current bigger apartment or house, but decide to rent out a room or even a couple of rooms. So there are options besides selling off the property that you have currently. So you have to consider, and everyone's situation is different. Our circumstances are different. Our family and extended family dynamics are different. So you will have to be the one to consider all these factors and circumstances because they will obviously affect your decision to monetize your property, whether through renting out part of it or even just outright selling it and right size to a smaller home. Now, I'm going to talk about two schemes here. One is called the lease buyback scheme. So for the lease buyback scheme, just to give you a quick overview of what are some of the requirements. And I think every one who is interested in the LBS would be interested in who is eligible. So at least one owner must be a Singapore citizen, and your combined household income cannot be more than 14,000. And fair enough, you should not concurrently own another property besides the one that you're trying to lease back to HDB. And all the owners have lived in the flat for at least 5 years. And there must be at least 20 years of the lease remaining. So if there's only 15 years or 10 years left of the lease, HDB will not buy back because the lease is deemed to be too short. And you must reach the eligibility age of 65, which is currently 65. Of course, some of these there may be policy changes in the years to come. Nobody can really predict, but currently the eligibility age is 65. Now, in the next couple of slides, I'm not going to go through every column and every box and explain every number, but I will give you some idea of what are some of the requirements, but I will spend time to go through one very specific example. Now, for this slide, you will look at the first column, and that is the flat owner's age. So you can be in the category of, say, 65 to 69. If you're less than 65, you're not eligible. You can be in the category of 70 to 79 and so on. So different age category, the requirements are different. Then in the second column, what do you need to top up if it is one owner? And we're talking about the full retirement sum. Now, you have the basic retirement sum, and I'm talking about CPF here. You have the basic retirement sum, you have the full retirement sum, and then you have the enhanced retirement sum. If you want to know what is the difference between all three, easily, you can look it up online. But everyone is required when we reach retirement age to have a basic retirement sum. The full retirement sum and the enhanced retirement sum is more, it's optional, okay? Unless you are trying to do an LBS, a lease buyback, okay? So here, the second column tells you if you are the sole owner of your property that you're trying to lease back to HDB, you have to top up your full retirement sum. And these are the numbers. And then if you have 2 or more owners of your apartment, then each owner is required to top up to the adjusted prevailing basic retirement sum, which is 90,500. And I've highlighted this because I'm using this as an example in a little while. Now, you will also be given a LBS bonus, a lease buyback bonus. So your household will receive the full bonus as long as the total top-up is $60,000 or more. If you are unable to do the full $60,000 top-up, then you will receive a prorated bonus. Okay. Afterwards, I will actually give you, you will actually see a QR code which will link you to a guide that will help you to know or understand everything you need to know about the lease buyback scheme. So these are nitty-gritty detailed information that you can access online. Then the options for the lease period. Earlier on, I mentioned a little bit about what is the lease remaining that you must have in order to be eligible. So at least 20 years of remaining lease. If you have less than 20 years remaining, so if your apartment is already like 75 years old and it's a 99-year leasehold apartment, then you're not eligible. So again, the first column shows the age of the youngest owner, and then the choice of lease retain. That means what you hope to retain. So for example, use a very simple example. Let's say I'm 80 years old and so I can choose to retain 15 years. So if I have 40 years left, okay, I can lease back 25 years to HDB. So it shows the minimum choice of lease that you want to retain, and then you can also have other options. Now, this is the slide that I said I'm going to go through, take the time to go through with you in a little bit more detail so that you can have a better appreciation of what this scheme is all about. So I will try to go a little bit slow here. And usually what I do, if somebody is going through some numbers with me, I will have my my calculator or my smartphone ready so that I can punch the numbers as the person explains, and that would help me to understand it better. So let's say you are a couple, both 65 years old, which means that you are eligible. You are joint owners of a fully paid 5-room flat. So there's no more loan outstanding, although in some cases there may be, okay? So you have fully paid, and your 5-room flat is worth $520,000 with 65-year remaining lease. So I would say quite a new apartment. So again, you are eligible. So this couple, they choose to keep a 30-year lease. So they want to retain 30 years and sell the tail end, that means the last 35 years of their apartment's lease, to HDB. So this is the scenario for this example. So here we have Mr. and Mrs. Lim. So how can they unlock the value of their flat with LBS, lease buyback scheme? So there are 3 main steps here, or phases. First, they have to apply for the lease buyback scheme. So in the application, they want to sell 35 years of their tail end lease. That means the last 35 years of their lease to HDB. And let's assume that it is valued at $219,300. Okay? Now, so if you take that to divide by 2, So each owner will receive 109,650. But they have to do some CPF top-up. See, that is the requirement. That's why I said earlier on that when we make financial decisions, we have to make sure that we make informed decisions. So we don't get to keep this entire sum of money. So step 2, Mr. and Mrs. Lim will have to top up their CPF retirement account. Okay. Now, each owner tops up their retirement account to the basic retirement sum of 90,500. Remember, I highlighted that number in a previous slide. Yes? So if you look at what Mr. Lim has, Mr. Lim already has 20,000 in his RA account. Okay, so that means he has to top out 90,500 minus 20, that is 70,500. Whereas Mrs. Lim only has 5,000. So she has to top up more. So this is the requirement, 90,500 minus the 5,000 that she has. So in order to top up, she has to top up 85,500. Okay. So that being the case, after this couple top up their basic retirement account, Mr. Lim would have 39,150, which is not shown in this slide, and Mrs. Lim would have 24,150. So in total, they will have 63,300. Okay, cash remaining, plus CPF Life, because the money that they have topped up into their BRS, their basic retirement sum account, they will get that back in the form of an annuity, which is known as CPF Life. Okay. Now, then part 3 is, remember, I mentioned that they will also receive the lease buyback scheme cash bonus. Now, since their top up is more than 60,000, in fact, Mr. Lim topped up 70,500, Mrs. Lim 85,500. So they're eligible for the 7,500 cash bonus, which is every $8 of top up, you get $1 bonus. So if you take 60,000, which is the max that the government will give, 60,000 is the max. So if you take 60,000 divided by 8, you should have $7,500. So to summarize, the value unlocked by Mr. and Mrs. Lim, so they have the cash proceeds remaining of 63,300. They also get a cash bonus of 7,500. And based on what they have in their basic retirement, in their retirement account, based on what they have in their retirement account, they should be getting $1,000 every month in the form of a payout from CPF Life, which is an annuity. So this is an example of how a couple can actually unlock or the value that can be unlocked by doing a lease buyback scheme. I hope that this example is helpful. And then when you go into the HDB website, they will also have many other examples. So this is the QR code that I was telling you about, a Singaporean's ultimate guide to HDB lease buyback scheme. Not only is this platform, not only does it contain a lot of information, but a host of FAQs, frequently asked questions. So I think that you will find this very, very useful. I'm pausing here for a moment in case some of you may want to just take a screenshot of it. Okay, then the silver housing bonus is another scheme, short, SHB for short. Very quickly to run through who is eligible. So you, at least one owner is a Singaporean citizen aged 55 or above. Then the income, household income must be within 14,000. Then the existing property must be a HDB flat, or this is interesting, or private housing, but the annual value must be 13,000 or less. Okay, and no concurrent ownership of second property. So you must only be a single property owner. And then the property that you are buying must be a 3-room or smaller from HDB, or you can also buy from the resale market. But the purchase price of this new property cannot exceed the selling price of the one that you are going to sell. Okay. So, and then the time frame, this is also important to note, that when you are booking of the new HDB flat or the application to buy a resale flat from the resale market, it must be before the sale of your existing property, or it must happen within 12 months of completing the sale of your existing property. So you can't say that, let me see whether I can sell my property first or not. If I can sell my property, then I will apply for this silver housing bonus. That is not allowed. It's not within the eligibility framework. So again, you see, we have to understand these schemes are to help with our retirement. So you have to top up your CPF account. So to qualify for the silver housing bonus, each senior household is required to top up 60,000 of their proceeds meaning the sale of your current property, into your retirement account and join CPF Life. Okay. So the top up requirement is capped at 60,000. And this one is very straightforward. You will enjoy the maximum cash bonus of 30,000 if you top up 60,000 to your CPF retirement account. So this is actually quite an attractive deal. It's cash given to us. So if the top up is less than 60,000, again, you will get a prorated cash bonus. Now, this example is a little bit more straightforward than the one that I shared earlier on about the lease buyback scheme. So Mr. and Mrs. A are selling their 5-room flat in Yishun, bought from HDB, and they want to buy a 2-room flexi built-to-order flat in Sembawang. So based on their proceeds, they are required to top up 60,000 to their CPF retirement account. And they will receive the bonus of 30,000. So this is a simple example, and the arithmetic is also very simple. Selling price of their current 5-room flat, 470,000, and then they still have an outstanding loan. This is not unusual. Most of us, we have not fully paid by the time we retire. Some may have. So assuming that Mr. and Mrs. A, they still have an outstanding loan on their existing property of 100,000, so they have to pay that off. Then the purchase price of their 2-room flexi built-to-order flat, let's say it's 141,000. Of course, they have to set aside money for that. And then they have to pay a resale levy. I think most of us are aware that when we sell our HDB and then we want to buy another HDB, we have to pay a levy. And in this case, it's 45,000. So if I were to take the 470,000, which is what we call the proceeds from the sale, minus the 100, minus the 141 minus the 45, we have a balance of $184,000. But we cannot keep that yet because we have to top up 60,000 to our retirement account, but we will get a cash bonus of 30,000. So this is the arithmetic, but you also have to step back and analyze the situation. And that is, Mr. and Mrs. A, they get a brand new apartment, okay? And now they get a brand new 2-room built to order, flexi built to order flat. And now they don't own anything on their home, 100% paid for their new home, okay? And then if I take the 184 minus the 60,000, they get to keep $124,000 cash plus another $30,000 cash plus whatever they have top up in the retirement account. They will receive periodic or monthly payouts in the form of CPF Life. Okay, so the arithmetic is one thing, but I repeat because it is important, and that is to step back and say, okay, what does this mean? Okay, what are the benefits? Okay, what am I getting? So again, I have downloaded for you Guide to HDB Silver Housing Bonus Scheme. Okay, and how it can help you or your parents. Some of you in the audience, unfortunately, I can't see all of you, your faces. Some of you may not be sort of like in your 50s or 40s. You are young working adults, but you want to help your parents. So this is a very good platform or link to getting more information about the SHB, the Silver Housing Bonus Scheme. So I'm going to pause for a moment here so that can take a picture, a shot of the, or scan the code. Okay. Now, the third option is cash top up to special account or the retirement account. The difference between the special account and the retirement account is the special account is set up and it's meant for old age and investment in retirement related financial products. So certain stocks you can actually use your CPF to buy, and the money will come from your special account. So this is set up for investment related financial products and also for old age. Then the retirement account is actually created on your 55th birthday. So you can top up the special account or the retirement account under the CPF retirement sum topping up scheme. And some of the benefits are like tax relief. Okay. So what tax relief are we talking about here? Let's see. Contributions to your special account, contributions to your topping up to your special account and your retirement account, you can have tax relief of up to 14,000 per annum. Tax relief up to 14,000, and the interest is this. I mean, it's practically guaranteed. Okay, because we are talking about your CPF account here. So we are talking about, when we say good, what are we talking about? We are talking about a good 4%, which is not easy to get. And then the downside is top-ups are for retirement needs. And it's used for monthly payouts when you reach retirement age. Okay, so liquidity may be affected, meaning liquidity means how quickly can you convert your assets to cash. So your special account and your retirement account, it's not like a bank account. If it's a bank account, I can anytime, go to the bank and go to an ATM and I can draw money. But obviously not with the special account and the retirement account. So liquidity may be affected. Maybe something comes up, your circumstances change, and you need the cash and you're not able to draw. So that is the downside, which you have to bear in mind because that is quite important to consider. Okay, the fourth option, I have to watch the time a little bit. The fourth option is the supplementary retirement scheme. This is a voluntary scheme, so it's not like a gazetted requirement. So you can set up this account with any banks. Okay, so contributions to your SRS account, supplementary retirement scheme account, are tax deductible, but it's subject to a cap on personal income tax relief of 80,000. So you cannot have more than 80,000 relief per tax year. And I will show you an example in a little while. Now you have to be careful about this SRS scheme because upon death, I can only distribute this by way of a will. So I have to have a will to state who I want to give this money to. The person that you nominated in the CPF account is not the automatic beneficiary of your supplementary retirement scheme, which is set up with a bank. It's not with CPF, it is set up with a bank. So I've already mentioned the benefits. It's voluntary, you have tax incentives, and the bank can also help you to further invest money in this account in several financial products. The downside is the penalty will be imposed when you withdraw before your statutory retirement age, which is 62 years old. And then, of course, there may be policy changes, which nobody can predict. Right now, you can enjoy tax benefits. We don't know. 5 years down the road, you might not. And of course, the interest that you earn in your SRS account, the interest is very minimal. I do not know specifically what it is, but it is definitely not 4%. Okay, I will very quickly run through 3 examples. This first example, it says that this member, SRS member, let's say Dora, has no taxable income. So I'm not working already, no taxable income. And then the prescribed retirement age or statutory retirement age is 62, which means that when my first penalty-free withdrawal is at age 62. So I've decided to withdraw when I'm age 63. So I don't suffer any penalty. So let's say I have 400,000 in my SRS account. I wish, but I don't. So 10 withdrawals are allowed. So I will withdraw 40,000 every year for the next 10 years. Okay, so no, 50% of the amount is taxable, but I don't have to pay any tax, okay? Because if you look at the tax rate, no tax will be paid as the tax rate is 0 for the first 20,000 of an individual's chargeable income, okay? So if you withdraw at or after your retirement, the statutory retirement age, no penalty. And if you're not earning any other income, you don't have to pay tax. The second example, let's say circumstances change and I now find that I have to withdraw at age 61, okay? So the first year, I have to pay a 5% penalty of 2,000. And the withdrawal amount, the entire 40,000, not 38,000, but the entire 40,000 is subject to tax. And based on the calculation, I have to pay tax of 2,550. But once I reach my statutory retirement age, then same as example number 1, no need to pay tax and no penalty. I can withdraw the 40,000 in the next 9 years. Okay, then the last example here, let's say I withdraw at age 63, so no problem. As per previous slide, 64, 65, 66, no problem, no tax. But at age 67, I kick the bucket, okay? But I still have 240,000 left, right? If you add up the 40, 40, 40, 40, 160, so I still have 240,000. Now, I better have a will that nominate the person that I want to inherit this 240,000. And let's say I designated my daughter, Marie, to be the beneficiary of this amount. So she will get the full 240,000 tax exempt, no tax, because I died, okay? Now, I'm going to move a little bit faster now. I actually timed myself and did a trial run, and my timing was good at that time. But I think, you know, when you're actually delivering the talk, you might get a bit excited and share more than you have time to. So I'm going to go through very quickly what are these financial products. And if you're interested, we actually have another workshop called Major Financial Products, where we talked a little bit in more detail on all these financial products. So basically, you can buy stocks and shares, bonds, unit trusts, and other financial products. The benefits is that you can potentially receive higher returns. You can potentially receive higher returns because it is higher risk. And also, investing in these financial products are more likely to beat inflation. Then a lot of downside of market fluctuations. In other words, we have no control over how the economy will perform. Possibility of losing part or all of your investment. Those are very real issues. So it's not a sure win. Now, of course, if you want to invest in in higher risk products, potentially they will yield higher returns. We learn high risk, potentially higher returns. Low risk, potentially lower returns. That's why when you put your money in a savings account, very, very safe. But the returns or the interest is like practically nothing. So, of course, cash, you put in fixed deposit or put in a bank, savings account, very low risk, but say the interest is hardly there. So it's not something that you can count on as a retirement income. But as you move up this arrow, this spectrum of risk, bonds is moderate risk. Singapore government savings bonds, I would say very low risk, but of course it's still a little bit more risky than cash in a savings account. And then if you buy stocks and shares, of course, very high risk, but potentially higher returns. So what do you need to consider before investing? Time horizon means how long can you stay invested? If you say, no, I need all my money back, within 5 years, then the situation is different than if you can stay invested indefinitely or for the next 10, 20 years. Liquidity needs, I mentioned earlier on that liquidity means how quickly can you convert your assets to cash. So how quickly do you need cash? That is also a important consideration. Then when you invest, you need to take into consideration charges, fees, transaction costs, and what is your risk tolerance. Some of us are very conservative, so we don't want to take very high risk. So the options available to us will be different from those that want to take very high risk. And of course, the older we are, if you are into your retirement age, although I'm not supposed to be your financial advisor, but I cannot resist saying that if we are older, like in our 50s, 60s, it is better to be a little bit more conservative. That means don't take such high risk. And then, of course, it also depends on what are your objectives in investing. Is it to get retirement income? Is it to make your money grow? Is it to have security, meaning you don't want your money just to be sitting and not earning any interest at all, but at the same time, you don't want to lose any of your capital. So depending on your financial objectives, your financial advisor should be able to share with you some insights as to what would be best options. Okay, very important to review your plans regularly, to consider factors like inflation, interest rate, your own health. I cannot overemphasize that. It's very important. What are the market conditions? Be a little bit more well-informed. Although the state of the economy is not within our control, but we can be more informed as to how the economy is doing, how is it forecasted to be doing. So these are things that would do us some good if we are a little bit more savvy, a little bit more well-informed. And what are some current government policies? And of course, our personal circumstances, which are different from person to person. Okay, I still want to do it. We have 5 minutes, but I would still like to do it because, or maybe I can ask the organizers. Steffi, are you there?
Yes, yes.
Okay, I have a short Kahoot quiz, but we only have 5 minutes left, so we can do without this. It's optional, and move to the Q&A, or we can do it. Maybe we should just move straight to the Q&A, since we only have 5 minutes.
Okay, we can do that.
Is that okay with you?
Yep.
Okay.
Thanks.
So the key takeaways are repeating. The key takeaways: it's never too late to start your retirement planning, even if your parent is like 70 right now. Okay, start, help them. Or if you yourself, you are 70, you can start. Be aware of the considerations when applying for age-appropriate options, and be extra prudent when investing your retirement savings. And the word that I used earlier on is conservative. That means don't take unnecessary high risk. Okay, so now, and these are some websites. Okay, I think this deck of slides will be made available to you, so you don't have to worry about taking a screenshot just yet. But we will need you to fill in this short survey. This is the IFL survey. The booking ID is 7277. So we really would appreciate it if you can take a few moments to fill up this survey, because we are always looking for ways to improve the way we deliver our workshops. So your feedback will be valued. So I'm going to stop talking now and give you a couple of minutes to complete this survey. Be sure to put the booking ID as 7277. Okay, I'm going to start the Q&A. Huh? So one question is, okay, before I start the Q&A, I just want to mention that I have never worked for HDB, okay? I've never worked for the Housing and Development Board. So some of your questions may be very specific, huh? So if I don't know, I will tell you that I don't know, okay? I won't pretend that I do. And that is one of the reasons why I actually downloaded the Singaporeans' Ultimate Guide to HDB Lease Buyback Scheme, and practically every question that needs to be asked have been asked. So you can actually find a lot of information there. But anyway, some that are quite straightforward, of course, I will address. LBS only applicable for HDB and not private property. That is correct. And then for the Silver Housing Scheme, assuming there is sufficient in retirement account, so one can take it back as cash. Now, if I remember correctly, I did mention this, that you have the basic retirement account, and then you have the full retirement account, and also the what is called the enhanced retirement account. Okay, so you have three: basic retirement sum, full retirement sum, and the enhanced retirement sum. Now, my understanding, again, I have not worked for CPF, so these are like very nitty gritty questions that I may not be of much help. But as I said, for the Silver Housing bonus, I've also downloaded the website for you to access. But as far as I know, the full retirement sum and the enhanced retirement sum, these are optional. It's not like required that we have to top it up. Okay, so if you have already fulfilled the requirement in your RA account, I don't think you need to top up some more. Okay, but you can always fact check me lah. Okay. I already have full retirement sum, no more loan intent to downgrade to 3-room BTO. Is Silver Housing bonus still eligible to me? I would think so. Just because you have done well and you have plan well, okay, and you already have your full retirement sum, and your loan is fully paid for, but now you're in your retirement age, I would think that you are still, you shouldn't be discriminated because of your good planning. But like I said, please fact check me. Okay. How about SRS for those working after 62? I don't quite understand where the question is. How about SRS? SRS is the supplementary retirement account. How about SRS for those working after 62? So, so you are saying that if, let's say, you are already 65, for example, and you're still working, whether you can still set up a SRS account. Is that what the question is? Okay. Okay, the SRS account, you can set it up at any one of the three local banks: DBS, UOB, OCBC. Now, I would highly recommend that when you have some time to just drop into any one of these banks. And I'm quite sure that you are currently already an account holder with any one of these three. Who isn't, okay? So you can speak to a relationship manager at the bank, and I tell you, they are trained to be very customer-centric, and you can ask them a lot of questions about the supplementary retirement scheme. from whether you can still open an account even though you are already after 62 to if you have an account, what kind of investments do they recommend, and so on and so forth. So these relationship managers, they are well trained in their product knowledge, and they're very customer centered, so they will be more than happy to help you. Can we have the recorded slides for our reference? I would say no problem at all. Please go ahead. Okay. Okay, let me see. I think there aren't any more questions, so it's already 4:05. I don't know whether there are any more questions from the participants. Now, I mentioned earlier on that IFL, we offer many other workshops. So if you like today, we didn't have a lot of time to run through the financial products, which can be an interesting topic to some of you. And, you know, you don't have a lot of time to ask me the questions. So we do have a, in fact, I'm looking at another question here about insurance products. So we do have other workshops, because this is only a 1-hour talk. We do have other workshops on insurance, very specific. So we will have people that are well versed in insurance products that can deliver the talk. And then personally, I've also conducted talks on major financial products. So the ones that we talk about today, I will go into detail each one of them. So, you know, so do, you know, look out for other talks that are available from IFL, and it's free of charge. Yeah. Okay. And then there's one more question here about tax relief after 62. So this is in the same category as an earlier question about what about SRS if I'm still working after 62. So I would say my response to that question is the same. Huh? You can, you know, have a conversation with any one of the relationship managers at the major banks regarding SRS, and they'll be more than happy to answer a lot of detailed questions because it's a product that they are selling. So they'll be more than happy. So I would like to hand the time back to Jonathan. Jonathan, over to you, please.
Thank you very much, Dora. Thank you, Dora, for your sharing. To our audience, we hope you have enjoyed today's session. If you have questions that we didn't get to address, please contact us at the address shown on the screen. Your feedback is important to us, so we could ask that you please scan the QR code shown on the screen to access the survey. We will send you the relevant links after this, including a link to the webinar recording. Thank you for participating in today's webinar, and we hope to see you again next time.